Hey, Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value or entertainment out of these videos, all I ask you is a thumbs up and subscribe. Questions, comments, put those below. As always, I want to remind you guys to go check out the Loonie Hour. It's the podcast that I put out every single Friday with Keith Dicker of IceCap Asset Management and, of course, Rich Diaz with Acorn and Macro Research. It is probably the best Canadian podcast, at least Canadian finance economics podcast. So I highly encourage you to check that out because a lot of what I talk about in this week's video, we've kind of talked in depth on that podcast about, but I'll certainly provide some additional thoughts as always of my own in this week's show because I think we've had a really busy week, at least in the Canadian landscape, so to speak. You had the Bank of Canada update their monetary policy framework. We heard from Krista Freeland an update on the Canada's fiscal budget. We had OSFI, the banking regulator, come out, and of course we've had all these local governments coming out with updates on restrictions and whatnot. So without further ado, I think we got to start it off with the Bank of Canada updating their monetary policy framework. Now again, they update this framework every single 5 years. Now what they basically did is they kind of kept it the same, but not really. What they did is, so they've got a 2% inflation target. They kept that the same, but what they did is they gave them a control range of 1 to 3%. And the most important thing here is they've added basically a labor component where basically they have to ensure rates stay where they need to be in order to sort of sustain maximum employment, right? So, and now, they called this, they said this, they were very emphatic that this wasn't quote unquote a dual mandate, but it kind of was, because even for their own Bank of Canada's lingo, they're not really able to determine what is and when is full employment. It's like a very gray area, right? I mean, are you looking at just the unemployment rate? You're looking at the participation rate, et cetera, et cetera. So kind of adding that additional sort of framework kind of gives the Bank of Canada some air cover to let inflation run a little bit hotter if need be. So that's kind of the important takeaway there. I think more importantly is just watching that policy announcement being done alongside Krista Freeland. Ultimately they're trying to give Canadians confidence, but that kind of brings me into the next point, which is an update on the budget deficits and the fiscal spending that's coming out of the Canadian government. Because as I've talked about before, I think in last week's video, right now in Canada we are running wartime policy, right? And again, there's no war with guns in the traditional sense. But you do have a war on COVID. I mean, that's at least what the politicians and policymakers are calling it. And it doesn't matter whether you agree with the restrictions or not. We talked about this again, in last week's video. As we can clearly see, it was it's all about case counts. Politicians just react. They see cases going up and they're shutting it down. That's why we're getting, this rolling wave of lockdowns across Canada, right? We saw Ontario, for example, going to 50% capacity at sporting venues, limiting indoor dining, etc., social events. Same thing just announced today in BC. We've got, for example, the Montreal Canadiens hockey game last night or 2 nights ago was, shut down at the final hours, 0 fans. So we're back to COVID square one, where there's 0 fans in the stadiums, and the economic damage that comes along with these policies. Again, right or wrong, this is just what politicians are doing, dragging this on, and ultimately the economic consequences of these policy measures provide, again, the Bank of Canada more framework, more air cover to basically delay rate hikes. I mean, I kind of joked about it on Twitter today. It's okay, we've got rolling lockdowns across all of Canada now. I mean, I think here in BC, they've pushed them till the end of, these new policy measures are until the end of January, and that's probably at a minimum. I mean, is Scotiabank still calling for 8 rate hikes? Hello? So, we're about to find out. I mean, I think that that's going to get tabled pretty darn quick. And probably good for the Canadian government. I mean, we got an update on the fiscal disaster which is Canada and the Canadian government. The budget deficit this year is projected to be just over $140 billion. $140 billion. And so just for context, if anyone remembers the global financial crisis, 2008, 2009, in 2009, coming out of that, sharp economic downturn, right? You'll remember at the end of 2008 was when Lehman Brothers, went bankrupt, belly under, and belly up. And so 2009 was kind of like this, deep hole that we're digging ourselves out of. And during that year, the federal government's budget deficit in Canada was $33 billion. So, today in this sort of war on COVID, the Canadian government is running deficits of $144 billion. Meanwhile, in 2009, as the banking system almost completely collapsed across the world, we only ran a $33 billion deficit. So that just kind of gives you some context. And again, a great chart here from my boy Rich Diaz, showing the budget deficit as a percentage of GDP. So the extent of the spending, regardless of who's in power, is going to continue. This is the progression, and again, nobody in mainstream media, nobody, like the general public and consensus in Canada, there's nobody coming out and saying, you shouldn't run these budget deficits. Nobody's questioning, the monetary policy or the federal policy, because again, it's like this war on COVID, and so like everybody's just kind of like, yeah, like government's got to do this, spend that. I mean, if you look at it in that federal budget announcement, Chrystia Freeland promised $30 billion for COVID sort of relief or COVID fighting over the next 6 years. 6 years. So they're obviously projecting this thing to go on further and further. And again, that will be sort of the air cover that the politicians need. And like I said before, you never let a crisis go to waste. And so this is the era that we're in. It doesn't matter who's in politics. It doesn't matter if it's the Liberals or the Conservatives in power. We are in an era where the central banks are walking hand in hand with the federal governments in order to sort of keep the economy sustained or elevated, because we are in this massive debt trap. And we see this now, right? I joked about this because like you're watching this, the renewal of the monetary policy framework, you've got the budget deficit coming in, you've got all this massive spending, and everyone's like, well, the cost of living. So the reaction is, well, we got to spend more, we got to give people more money, we have to give them more, and it's just control P, and that's. It's a great analogy. If you go back and read, again, this is not my case. I'm not projecting, hyperinflation, for example, but it's funny because just these sort of similar analogies in Weimar Germany during the hyperinflation, the belief. This is a true fact. You can go read your books on it, history books. The belief in Germany at the time, and the belief from the Reichsbank. The central banker there, they genuinely believed that there was actually a shortage of cash. There wasn't enough money, right? Because prices kept going up and up and up. So they felt they had to get more out, give people more money, get more money out the door. There wasn't enough money in circulation. That was the prevailing belief, because, if you think about the general society, is they were like, hey, listen, we can't afford, we can't even afford to eat. You guys need to give us money. We need money. And so, the reaction, obviously, from policymakers was just keep giving people more and more money. But again, it kind of just created this spiral of ever higher prices. And again, I'm not saying that's the case here in Canada, but I think it's important. There's similar sort of thought process today. Governments want to keep helping people, but arguably by helping, we're creating problems elsewhere, and one of those ones is the national housing market. We just got the latest data across Canada, national home prices up 25%, all-time record high in terms of the pace of home price inflation, right? The growth rate on a year-over-year basis hitting 25% is in fact at all-time record highs. And what's important to kind of take away from this is that prices are actually accelerating on a monthly basis. So you're not seeing home prices actually decelerate right now. You're actually seeing them accelerate up. You're seeing the rate of growth actually increase on a monthly basis, which is actually very concerning. National home prices increased 2.7% month over month. Now again, you can go 2.7. Home prices rising by 2.7. If you want to times that by 12, feel free to do the math, and you can understand where this picture goes if that rate of growth were to continue hypothetically. I certainly don't think it will, but this home price acceleration. I kind of joked about it because national home prices up 25% year over year as the federal government that same week announces, another wave of just massive fiscal spending. And I just said, Merry Christmas to the 69% of homeowners in Canada, because it's the gift that keeps on giving. Now, if we kind of unpack this further, the price accelerations is really across the country. You've got Toronto up 28% year over year. You've got Montreal 21%, Vancouver 16%, Calgary, Alberta, God bless, 9.3%, which for Calgary is a massive move for a market that's been flat for a decade. Ottawa up 17%. I think, I looked at it. One of the craziest charts was Moncton, New Brunswick, right? I mean, up since the start of the pandemic, right? So since March of 2020, home prices are up 50%. I mean, this is a crisis. The sort of fiscal, monetary, the debt picture in Canada is really appalling, and I kind of, some days I just scratch my head when I see some of the media coverage and everything that's happening and all the policies that people are trying to vote on and approve and push through and lobby government for. And I just wonder where the critical thinking was, where it seems like Canada's just losing their way. And as a proud Canadian, I really worry the direction, unfortunately, that we're going. Just the lack of critical thinking here is truly appalling. And we had this announcement at the same time, right? We've talked about everything we've talked about in this week's video. National home prices, everybody knows. The cost of living crisis that continues, and we had an announcement this week from OSFI, right, the Canadian banking regulator. And I've been talking about for a number of months now, most recently in my report, was that I think that we're getting closer and closer to some policy intervention from various levels of government, because national home prices growing at 25%. I mean, that is a crisis, and so eventually they're going to be prodded to do something. And so I kind of figured OSFI had this big announcement coming out, and they're media. They were calling in all the media, releasing media presses for Friday. And figured, okay, they'll probably maybe they'll bump the stress test up. That was kind of the rumor. At least if you bump the stress test up, let's say, even 10 basis points, it kind of at least signals to the market that, like, hey, listen, like, we as the regulator think that things are getting a little bit out of touch here. And 10 basis points at least shows that you're kind of like beginning to really look at things. And they actually came out and just didn't do anything. They left the stress test where it was. And I said, well, that's kind of interesting when you consider the fact that residential mortgage credit growth, borrowing for mortgages is running at a 10-year high. You've got national home prices inflating at all-time record highs. That surely these guys would come out and at least sort of prod the market. But again, nothing was done. So Love it or hate it, it is what it is. We can only basically allocate our capital and our decisions around that. But very fascinated Canada here, to sort of throw another, wrench in it, so to speak, is we've got the rolling lockdowns now that are obviously unfolding, and what that's going to mean, moving forward for government policy. Particularly, I look at the central banks and the federal government spending, et cetera, and how that is going to, impact everybody's lives in the housing market, right? So, even from a very micro thing, I'm looking at and saying, okay, well, if you continue to have these rolling lockdowns, if you have now delayed the return to office, so to speak, in my opinion, I look at it and say, well, from a very micro level, you would think that your entry-level single-family detached house in the suburbs continues to benefit. The downtown condo market, that recovery is likely delayed on a very micro level. So again, watching all of this with fascination, and hopefully through this channel and through the podcast, we're really trying to expand on long-form, in-depth, Canadian-focused content that can really touch on a lot of the issues I think that we are facing, as a society and as a nation. So, as always, appreciate your support for tuning in. We do have a lot of big things planned for the new year. I think we got one more video here before the new year, but we will wrap this up. Like I said, I've got a show coming out here. I'm going to do we'll do a Q&A in the Vancouver, Toronto housing market with John Pastalis. So I'll keep you guys posted on that. As always, see you next week.